guys, welcome back. In today's video, we are talking about shorts faking price, how shorts are losing, the dividends, and many more in this video. First, we're taking a look at this. AMC is always fascinating how buyers coordinate to make sure no one places any buyer orders when shorts want the dump price. Look at the candle, absolutely engulfed yesterday on no volume. RSI wasn't even too hot yet. Control the flow, control the price. So this is just another screenshot, and we're taking a look at AMC in terms of the price movement and the volume. And so what you will see is how AMC is obviously going up, and you can see the volume candle really kicking in. So you can see it takes a large amount of volume, and especially buy volume, for AMC price to obviously increase. You can see it reflecting. However, and you guys can see here, in a candle where we see AMC drop and it engulfs the previous bullish candle, the volume was near none. And so this is what we talked about in terms of how, and again, obviously with the sarcasm, because there's no way buyers can obviously coordinate to make sure that no one places any buy orders. But what can happen is, of course, buyers buying AMC, it gets routed into the dark pool, therefore having no pressure, and shorts trying to obviously dump it and controlling the price. And so this is clearly something, because if this is the same logic, if it only takes this amount of sell volume for the price to drop this much, then you can only imagine how AMC should go up when we see buy volume this large, buy volume this large. But again, that isn't the case. And to understand in terms of about people buying AMC, and we've shown it with multiple other users, but you can see here, 100 AMC on the lit exchange, so where we're looking at for a particular user, and also someone else, MY, who also tweeted at me showing his position in AMC in terms of $6,900, 9,000 shares worth of AMC, coming in around $24,500. And so this is what we understood in terms of how people are always buying into AMC. First is understanding how the investor base of AMC is extremely strong. And this is something that we've always known. It's also understanding that people are continuously DCAing or just buying more AMC shares. And so going back to this of seeing suddenly where we're getting zero volume of AMC and seeing the price drop this much, well, I just don't think that is something possible, or at least that seems real, because we're always continuously seeing people buying in. Now, another thing, and we're taking a look at the short sellers of AMC, or rather the negative viewers of AMC. So we can see it's happened. B. Riley now lower than AMC. You know where B. Riley can stick the AMC price target. I have an idea. So we're looking at B. Riley, and they've dropped drastically. So we've seen in the past how they've given targets for AMC. We've seen their positions on AMC. And this is what we have continuously said. People who have doubted AMC, people who have shorted AMC, people who have said to sell AMC, all their firms are all doing extremely bad. You know, when we go from different understandings, firstly, one of the examples we gave recently, when you look at a previous short seller who's only shorted AMC, who's bought puts of AMC, who have then switched their positions and bought a huge amount of shares of AMC, aka Goldman Sachs. So that's one particular institution. We also have short sellers of AMC like Virtue and Citadel, who have all seen, firstly with Citadel, having to raise cash to pay their investors, despite saying they've made billions of dollars in terms of profit. We've seen Virtue obviously see how their financials are going down, revenues going down, their loans are going up, their profits are going down. You know, these are all what happens with the short sides of AMC. They are all seeing signs of decline. And so this is what we talked about in terms of understanding the longevity of a company. And AMC is surviving, but these short sellers aren't. Another thing to look at is, of course, the fundamentals. So we just talked about the longevity. And that's very important, because the reason why we know some short sellers are doing bad is because firms like Citadel, like you said, needed to sell needed to sell bonds in order to raise cash for investors, despite making billions of dollars. Now, if they did make billions of dollars and were extremely healthy in cash, they wouldn't need to do so. So we know that's a sign of the decline in the company. Now, for Virtue, we've also seen the fundamentals. The fundamentals are obviously doing bad, like I talked about, revenue going down, profit going down, and loans going up. And so this is showing signs about how they can't survive for long term. Now, when you take a look at AMC, you can see that firstly, for the quarter to date box office, we are doing extremely well. And we're just seeing how AMC is obviously growing. You can see here $877 million for the total gross of the quarter to date box office. So that's obviously extremely well. Another thing to understand is we have earnings coming up very, very soon. And it's something we have to understand in terms of what we should be expecting. One thing we can use in terms of a relationship is Cinemark. So for Cinemark right now, what we can see is that their Q4 revenue increased 27.5%. They had the full year net income of $313 million. They had record high food and beverage per cap of $5.96. And some of the things like we talked about, they reinstated dividend at $0.32 per share annually and reduced pandemic related debt by $156 million. So let's talk about the positives and how it relates with AMC. So we know that if Cinemark were able to see a Q4 revenue increase, then obviously AMC will be in that same position. So that itself is a good thing, because we have to understand that for AMC to reach profitability, they need to right now see an increase in their revenue. So if Cinemark were able to do so, and we understand how AMC has improved and increased their streams of revenue, then we understand that we will see AMC increasing their revenue. Something else to also see is obviously Cinemark recorded high food and beverage per cap of $5.96, and we've seen that AMC has done the same as well. And so some of the situation that Cinemark is in will be the same for AMC. Now that itself is obviously a good thing. Another thing, and it's talking about the dividend. So we understand that if a firm were to be in a good position, they will obviously issue out dividends. The thing that's different with AMC and Cinemark is obviously Cinemark has a very strong cash position of $1.1 billion. Now, AMC is obviously not. And again, we have to be, 100% truthful and just understand what's going on. But this is something that I know that AMC can obviously reach to. And so we then understand that once AMC reaches profitability, once AMC is able to reach a state of healthy cash, we will be likely to see dividends for AMC, and that's what we always wanted. And now, a thing that I think AMC has done way better, you can see they Cinemark reduced pandemic-related debt by $156 million. Now remember, Cinemark is able to do this with having a strong cash position of $1.1 billion. And we've seen their revenue increase. AMC has been able to do the same thing, but in a slightly worse position than Cinemark. Now remember, I think that the potential for AMC is way better than Cinemark because of the fact that AMC is the biggest theater company in the US, and because of everything they've done, because of all the support behind them. This isn't me just saying it out of randomness. This isn't me trying to have a biased opinion, but with every data that we've gathered in the past, yes, I think that on fundamentals, Cinemark is obviously better than AMC. But when we take a look at the potential of what AMC can reach, what AMC can do, I think that they are in a way better position. And it's the fact that AMC is able to do these things whilst behind Cinemark, I think that's the most impressive thing. Now, the negative is obviously saying full year revenue slightly decreased 0.6%, 4.1% decrease in annual attendance, and then just the EBITDA slightly declined. So the thing here, and these are the negatives, and that's why I'm extremely excited, and I can't wait to see the earnings for AMC. Because when we take a look at here, so for revenue, I can't say for sure that we will see an increase, but what we have seen is AMC has recorded record in annual attendance. They've also seen the best ever EBITDA last year as well. And so if that were to carry on into Q4, then this is obviously very good. So if we are able to see areas where AMC's earnings are doing better than Cinemark, then it reflects back to what I said earlier in terms of the potential of AMC is just way better. Now, another thing is taking a look at the reverse repo. What we are seeing is $63 billion for the reverse repo. Now, like I said, on the 60-day average, on the 30-day average, on the 1-year average, we're seeing the reverse repo going down. And that itself is a very good sign in terms of understanding the illiquidity issues, which shows that institutions and shorts and hedge funds are all running out of money. And so the more money they run out, obviously the less money they will have to suppress and manipulate AMC. And like I said, that's what they rely on. And going back to earlier what we said in terms of how we're seeing zero volume, remember, these are all done on the back of synthetics, of naked shorts, of algorithms, of all these news articles that push out, and they all rely on money. So if we are seeing them running out of money, we're going to be seeing how they will be lacking methods to suppress and manipulate AMC. And you guys, thanks for watching. I'll catch you guys next time.